7 easy tips to save money on a low income. We are all aware that the ability to save money is becoming increasingly difficult with each passing day. And when you add the challenge of a low income, saving money may seem downright impossible. But fear not, I'm about to unveil 7 savvy savings strategies that will revolutionize the way you think about saving money. By applying these hacks, you'll be able to watch your bank balance balloon in no time. Say goodbye to financial stress and hello to a brighter, more prosperous future. Tip number 1. The 5-minute budget. I know what you're thinking, creating a budget is the most cliched advice out there. While it's true that many people suggest using a budget, most of them fail to explain it in a simple and straightforward way. They make the process unnecessarily complex, causing you to tune out and swear off budgets forever. However, budgeting is a crucial skill that everyone needs, regardless of their income. Without one, it's easy to slip into financial despair. For example, even those making a high income of $250,000 per year can still be living paycheck to paycheck. That's why I want to share with you my 5-minute split budget, which is easy to make and even easier to manage. You simply split your after-tax income into 2 categories, spending and saving. The spending category covers all your bills, while the savings category helps grow your wealth over time. By adopting this simple budgeting method, you'll be able to manage your income better and be in a stronger position as your income grows. Tip number 2. Be prepared for emergencies. Let's take a close look at the importance of preparing for emergencies. Life is unpredictable and full of surprises that can come at a high cost. That's why having an emergency fund is crucial to ensure that your financial progress doesn't come to a halt. I understand that you may have heard this advice before, but I'm going to explain why having an emergency fund is essential. Firstly, it's a powerful tool to prevent you from relying on credit cards or loans when an unexpected expense arises. By having money set aside, you can avoid getting into debt and incurring additional costs. Secondly, an emergency fund can act as a safety net in case you lose your job. Most people rely on their 9-to-5 jobs for income, but jobs aren't as reliable as they used to be. Having an emergency fund can provide financial support until you get back on your feet. I recommend having a year's worth of expenses saved in case of job loss, as it can take several months to secure a new position. Remember, an emergency fund is essential for saving money and avoiding financial despair. Hit the like button below if you agree. Tip number 3. Claim free money. Tip number 3 is about claiming free money that you may not even realize you are entitled to. Unfortunately, money is hard to come by these days, and many people are missing out on opportunities to get free money. One example is the grants available to college students, which can significantly reduce their tuition fees. The average student grant in the U.S. is around $4,400, and most students are eligible for it. Another example is employer-sponsored 401 Kelvin programs, where employers match your contributions up to a certain amount. The average match is currently between 3 to 5%, meaning that if you make $50,000 a year, you are missing out on roughly $2,500 of free money. These are just 2 examples of free money that people are passing on every day. Therefore, it's essential to identify such opportunities and seize them whenever possible. In the next hack, we'll talk about a practical tip for saving more money: only spend cash. Tip number 4. Only spend cash. Nothing feels more satisfying than holding cash in your hand. However, one of the worst feelings is the pain of giving that cash away. This feeling can be used as a tool to save more money. Paying with cash has a different emotional impact than paying with credit. When you pay with cash, you can see the money disappearing, which can be a useful tool to make you more mindful of your spending decisions. By only paying for purchases with cash, you can train yourself to appreciate every single thing you buy and make more informed decisions. Although this approach may not be sustainable in the long run, it can be a useful hack for those looking to jumpstart their savings habit. Tip number 5. Freeze your spending. To save money and potentially retire early, consider a spending freeze, which involves limiting or cutting out discretionary expenses. While it's not feasible to stop spending money altogether, you can focus on reducing expenses that don't add much value to your life, such as entertainment costs or non-essential purchases. By doing so, you can evaluate which expenses are necessary and which are not. For example, cutting back on drinking every weekend could help you avoid hangovers and save money, while biking to work instead of driving could improve your health and save on gas expenses. This approach can help you save money in the short term, while also improving your overall quality of life. Tip number 6. Use the 1% rule. The key to achieving a long-term savings goal is to track your progress consistently. However, tracking your savings journey can be tedious. This is where the 1% rule can help. The rule suggests increasing your savings rate by 1% every 2 to 3 months until you reach your desired savings goal. Consistency is crucial for successful saving, as starting early and gradually increasing your savings rate determines the amount of time it takes to achieve financial security. To implement this rule, set up an automated deduction equal to the amount set in your budget, starting at a manageable amount. Then, increase the savings percentage by 1% every few months. This gradual increase will allow you to adapt your budget to your savings plan. While increasing your savings rate, you will realize that saving is not as difficult as you initially thought. By starting small and gradually increasing your savings rate, you can comfortably achieve your desired savings goal in the long run. Tip number 7. Diversify your income. It's important to diversify your income streams in order to reduce the risk of relying solely on one source of income. While some people focus solely on their primary income source, such as their job, diversifying income sources can offer a more secure financial future. Depending on one income source can be risky as it could disappear at any moment, so diversifying income sources is always recommended. Combining a job with a side hustle, or investing in cash-producing assets or a side business, are some ways to diversify income streams. By doing this, people can generate more cash and avoid halting their savings progression if one income source dries up. Having multiple income streams provides a sense of security and stability in case one source of income suddenly disappears. If you'd like to take a deeper look at some different income sources you may want to add to your portfolio, then click the link to the next video. We will be going over the 7 different streams of income all millionaires share. If you found this video helpful or entertaining, then please give us a like and subscribe to our channel so you don't miss out on more amazing content like this.